Welcome to Investors Insight, where today's topic is outperforming expectations. So market volatility was a theme again last week as the market is continuing to digest the news around tariffs. And so I really want to focus on earnings expectations. And Ty, we mentioned in last week's vlog that volatility has picked up due to tariff uncertainty and concerns around the economy. But we want to focus on a key driver of equity markets, and that is earnings. And earnings continue to come in strong and outperform expectations. So as we hit the tail end of second quarter reporting season with roughly 70% of results in for the index, earnings continue to outperform expectations. As you can see at the top of the second quarter chart here for the S&P 500, highlighted in green, sales growth has increased 5.6%, and blended growth for the S&P 500 now stands at 11.2%, light years ahead of the estimate of 5.8% on July 1st. So if these results hold, it will mark the third consecutive quarter of double-digit growth. And so strong results from technology and discretionary have driven the latest leg higher for the broader index growth rate. So, and this growth rate in earnings has been impressive considering the unknown around tariffs. So with second quarter results coming in solid, our attention will be on more normalized expectations heading into third quarter, and we'll be watching closely to see if earnings can continue to support a market that can be considered expensive if you're looking at the multiples. So earnings continue to outperform expectations, which is a key driver for the market. And so, Ty, as earnings are coming out, we're getting more information from companies spending on artificial intelligence. Talk about that.
Yeah, to your point, earnings season's in full force. We had four of the biggest tech or tech-related companies in the world report earnings. They're spending a combined $95 billion in CapEx this quarter just on artificial intelligence. So that's a huge number. We always talk about artificial intelligence and a theme of the market, and it's something that we think is here to stay. It's not going away, especially with the recent tax bill having some very lucrative kind of provisions for CapEx spending. But their estimates now are to spend, just these four companies, to spend as much as $364 billion this year. And the prior estimate was $325 billion, which is still a huge number, but we're up 12% from that in their fiscal years. Before COVID, $364 billion was a stimulus package from the government. So these are huge numbers that these companies are spending on AI to try to win this race, and we don't think it's slowing down. And it's a theme that we're certainly keeping our eyes on.
Yeah, so the market's kind of having a little tug of war right now between the good news of earnings outperforming expectations versus the uncertainty around what's going on with the Fed and when they're going to cut rates, and also the uncertainty around tariffs. So a lot going on as always. If you have questions about anything we've discussed today, please call us, email us. We love to hear from you. Have a great week. Thanks.